Hello and welcome to the stock specific class here for Thursday, February the 3rd. As always, if you have any questions during the week, or if I don't get to some of your questions during the class, you can always send those to jerry@traderspro.com. Let's get started with, we kind of continue what we talked about on Tuesday in the market update. I pointed out a couple of critical areas. We'll take a look at those because we didn't quite break out. We broke out of one, but we didn't break out above the other. So we're still kind of in this danger area of having another drop. So we got to pay attention to that. And because of that, and I'll talk about this as we go through the analysis of the market conditions, we're just still not in a ideal state to really load up on trades. I will go over some today, potential trades. I know that's why you tune into the class, to get some ideas, but especially for those of you that are new, this isn't just like a stock picking class where you just log in and I talk about potential stocks and you just go buy them. There's a process, and I'm assuming that you're here because you want to learn as well. You want to learn how to analyze the markets and how to look at the market conditions before making your trade decisions. And that's an important part of the process. You got to see what type of environment you're in. Is it a bullish environment? Is it a bearish environment? Is it a neutral environment? Because if you're aggressively buying in a bearish condition, or even a neutral condition, sometimes you can get hammered and lose a lot of money. And now we can't, again, just because we buy stocks in bullish conditions doesn't mean that those trades always work either. I'm not suggesting that this process will allow us to always be right, but the trading is all about managing probabilities. There are no absolutes, and so you're constantly looking at, what is the probability of the market going up here? What is the probability of the stock going up or going down, or what have you? And as part of the process of managing those probabilities can shift or change. You could have a really bullish condition one day and a very bearish condition the next day, and you got to be able to adjust to that. So let's start off with the direction alerts here. Now, these are going to update overnight, so they're not really reflecting the downward move today in the market. Momentum is still kind of in the middle range. Same with Brett. Yeah, really, they're not telling us anything different than what we talked about on Tuesday. So I don't want to spend a lot of time on this. I will point out though that the sentiment indicator has moved with the rally over the last couple of days. Remember, we're down a little bit today, so this may back off into the high range when it updates overnight, but it's moved into that extreme complacency range. And I'm going to talk about this a little bit when we look at the critical area that we pointed out on Tuesday and how we might be reversing from that. I always keep pointing out that the last sell-off just did not scare the market very much, and so it's bothered me. It's going to continue to bother me, but it's bothered me for the last 8 months when we've had some of these sell-offs. We haven't reached the fear level that would allow me to really be confident that the markets are going higher. It doesn't mean that we haven't done any trades. We'll trade the trend, but those are little clues that I tuck away, and they often are useful or come up later on. When we do have a drop and there is fear in the market, then we remember what we were concerned about earlier. All right, so let's move over to, buy-sell ratio chart here. You can see the sells have come way down. Buys have moved up a little bit. Now, notice how the buys haven't moved up very much, but the sells have moved way down right here. This is really a reflection. This typically happens when you get to these extreme levels and you start to get a shift. What this is telling me is there are a lot more stocks that are moving from sell to hold than are going from hold to buy. Now, I would expect that after a big sell-off. We had a lot of stocks that were in the sell area. We already noticed that last week when we were looking at the index tab right here, and we were looking at the different indexes. Again, look at Russell 3000 right here. You had 718 sells versus 282 buys. So what we're seeing is there's a lot more of these stocks that are just moving into the hold area with the rally. Not as many that are going from hold to buy, but that's very common. It's common to see that after a big sell-off. Now, when you've been in a strong uptrend for a while and you pull back a little bit, what you'll see that there's not as many stocks going to sell from hold to sell. Maybe a lot of stocks going from buy into the hold range there. That typically happens, when you're closer to a market top, and you get a little bit of a pullback in a market top. So, what does this mean? Well, to me, it means that let me go back to this chart here. It tells me that sell-off was deep enough to where, again, and we talked about this a lot on Tuesday, is this a potential bottom that we could buy and that could rally from here? It was deep enough to where that is a possible bottom, because that's typically what you see at a bottom is more stocks moving from sell to hold as these two lines start coming closer together here. So, but overall, though, it's obviously not showing an extreme. We're moving away from an extreme that we're at. Not much else to really point out there. Sentiment, again, nowhere near. We're right in the middle, so we're nowhere near either of the extremes. Let's take a look at our market update list here. I want to spend some time on the S&P chart. So last Tuesday, we were talking about this trend line right through here, breaking above this. This is a former breakout area. We are right at it. In fact, we surged a little bit into the close. We did kind of move above that. Let me back out a little bit here in time so we can see the significance of this area a little bit better. So we were looking at right in through here. This was a previous all-time high. It pulled back, broke out of it right here. It came back to it. It's not exactly, it did dip a little bit below it, but it came back to the area and held a support. Came back to it again, it held a support, broke out to a new all-time high. Here was that big reversal day on January 10th. Bounced off of that, didn't rally off much off of that. Then it broke through it right through here. So on Tuesday, I was talking about one of the first steps is we got to get back above this area right here, this breakout area, because it's significant. It's tested it so many times that the buyers are if the market's going to rally, that's where the buyers are going to start getting confidence, is if they can break out of there and hold there. That's what I would want to see is it surging out of that area there. The other key one was that January 10th low right here. Could we get above that low? And that's what I want to focus on from what happened yesterday. Let's go back to our 6-month chart here so we can get a little more detail. So yesterday, we basically closed right at that low. We did clear one hurdle, and actually, really, this was close. This was right at that trend line right here on Tuesday, maybe a little bit above it. We did close above it yesterday, but the fact that we just now reversed off of that concerns me, because again, I was worried that maybe this could be just a correction for another move down. Now on Tuesday, I was talking about the fact that this was a little bit more impulsive looking. This was a little bit more sideways. This was a little bit more impulsive looking, giving me a little bit more hope that that this is going to just keep going up. But now with this reversal right here, it really has me concerned. Another reason why it has me concerned is that you have Facebook we're talking today about whether, Facebook's whole, business model they're no longer a growth company. Are they a company that could even survive? Are they going to be able to survive obviously they're going to survive for, a few more years, but without doing anything, because they're big enough and have enough stuff going on to do that. But I know they're trying to make this shift into the metaverse or whatever. Is that going to be a totally different company? And but there's questions on that. There was questions on Netflix. Again, the big question with Netflix earnings is, are they growing, or are they in the same boat where they've grown as much as they can grow? And so we're having kind of company after company come out and just not only just not produce very good earnings, but wonder if their whole growth phase is over, and are they going to start declining, or just kind of topping out? The reason why that's significant is because these growth companies can their stock prices can go up, even though their valuations are extreme, or their PE ratios are very high. They can continue to go higher because the expectations that they're growing, and nobody knows how much further they can grow, or how fast they can keep growing. There's so many uncertainties there, but the green factor is the money that they can be made if those companies keep growing is there, and that's what drives these traders to pay up for these stocks, to pay to continue to pay for those high multiples, because there's that unknown of how big they could become. But when you start to get signs that they're not going to grow anymore, or worse, that they can start to decline, man, those institutional traders start hitting the sell button. And if you remember, for the last probably 4 or 5 years, what are the stocks that have been driving the market? It's been those FANG stocks, Facebook, Amazon, Google, Netflix, Microsoft, and those stocks have been driving everything. And now you've got two of them with Netflix and Facebook that, they're like I said, there's a big unknown there. It starts to concern me that maybe this could be a trigger or a reason that maybe we get a bigger sell-off. Now, again, I'm just talking through this right now. I'm not saying that, hey, let's go short the market here. Just one day is not going to convince me of that. But you look at this a little bit deeper. In fact, let me go to the Nasdaq chart. We gapped down. Here's where we opened, and then we immediately tried to rally back up, and we came all the way up here. In fact, I normally don't like to make trade decisions in the buying decisions in the morning, because there's I tend to like to see how things close and make my decisions based on the close. But I was tempted to go in and buy some call options on the Qs, thinking that this was just a dip, and that was starting to move, because that's kind of a bullish reversal signal when you gap down. Kind of what happened right here. You gap down from the day. Here's where you closed the day before. You gap down, but you're trading higher than where you're trading higher than the open, but still lower than the day before. That's a bullish reversal type of price action. And it looked like it was forming that. And then, I thought, well, I'll wait another hour just to make sure. And sure enough, it started to slide back down. Not only did it slide back down, but now we're trading lower than where we opened. What is that telling me? Well, buyers were trying to push things up and they failed. They failed, and so I'm going to watch this very closely. If we start sliding into the close and dropping even further, that's a very bearish sign for tomorrow. And obviously, if we have a bigger sell-off, if that triggers a bigger sell-off tomorrow, what is one of the phrases I always talk about when you have a big down day on a Friday? What do you hear me often say? Markets don't typically bottom on a Friday, so there's probably further to drop on Monday. Now, there are a lot of bottoms that take place on Monday, so a lot of times you can get a drop on Monday, a gap down on Monday, and then buyers kick in and it can go right back up. But again, you start adding this up, we're in a critical spot where we went right to that next area that we wanted to see us break above, get above that. We didn't quite do it. In fact, that candle right there was actually a bearish candle. Well, I'm looking at the Qs now instead of the S&P chart, but that's we call that a hanging man candlestick formation, and it's typically a pretty bearish candle there. And obviously, we dropped off of that, but yeah, we're in a critical spot right here. So, why is this important to understand? Well, again, this leads into the fact that although I'm going to go through some stocks today, because that's what I do in the class, the market conditions are not very bullish right now, and they could really slide to pretty ugly, possibly tomorrow. I think tomorrow will be a lot more telling as to how concerned we need to be, because like I said, one day doesn't always set up a full trend. So we're going to keep an eye on that. Russell 2000, its drop is not as dramatic, but it's also the rise wasn't as dramatic. We started to see a spark in those small cap stocks earlier in the week. I thought maybe we could, because when you start to see money going into those small caps, that's usually a sign that traders are wanting to take on more risk, which is usually more of a bullish sign. And we're seeing volatility drop at the same time, but we didn't see any follow through to that. So that does concern me a little bit. Other factors here. Let's stop on oil though. Oil continues to be the one that we want to be. In fact, I'm going to add some USO to the portfolio. USO is this is the ETF for oil. So I've already got a lot of individual oil stocks that are in the portfolio, but that's all I really feel like I want to own right now. They're holding up very well. They've been going up with the market going up. They've been holding up on some of these pullbacks. The oil's up today with the market down. You have that whole Russia-Ukraine thing that I think is really going to cause oil to spike. And so I think this is where you want to have some exposure there. I'd probably maybe have a little bit too much exposure, especially if I'm adding USO. But this is probably the safest area to be in from a bullish standpoint. But anyway, dollars dropping. That's also what's fueling a lot of the oil rally, because commodities and the dollar tend to trend in opposite directions. They don't always. You can see here that they were trending in the same direction through here. Oil was going up, the dollar was going up. But when you do have a falling dollar like this, impulsive down, this is now looking like a trend reversal, impulsive up, impulsive down, looking like the dollar is going to continue to drop. That's going to be additional fuel for oil to go higher. Just a lot of catalysts for oil to go higher. I mean, again, we talk about probabilities. There's a high probability oil is going higher. That's not a coincidence that I'm loaded up on that, and that's the only thing I feel comfortable in right now, because that's the only one that looks to me like there's the high probability for it to go up. Now, will it? Could it still drop? Absolutely. That's why I have a trading plan in place, stop losses prepared. I have very tight stops on those. If you remember, I talked about that on Tuesday. I'll talk about it again when we look at the portfolio today. But yeah, and then the VIX, you can see the VIX came way down. volatility came way down, but look what happened today. It's moving back up. Now, again, the VIX doesn't tell you something significant every single day. I wouldn't characterize this as a big move up in the VIX, so it's not like I'm saying, oh, the VIX is telling me the market's going to crash or anything like that. But there's definitely a level of concern there. Now remember, the VIX and the market are usually and the S&P, I should point out, because you're always comparing the VIX to the S&P 500, not the other indexes. But there's one little subtle clue that I can gauge sometimes is, what if if we had a sell-off day today, the VIX might have been up, but maybe it was up just a little bit. Market down quite a bit, but the VIX is only slightly up. That can be a real subtle clue that concern level on the selling isn't that bad. The point total could look bad. Dow down 300 points or something, but the VIX not moving up very much would tell me that those professionals aren't rushing out and buying protected puts. Why aren't they doing that? Well, my only reason would be, or my only conclusion would be, they're not as concerned about the sell-off that they feel like they got to go spend that money to buy those protected puts. So now sometimes the opposite happens. You get a little drop in the market, but you get a bigger spike in the VIX, or you get an upward day in the market and a move up in the VIX. Those are telling me that those professionals are buying protected puts aggressively, and you're like, why are they buying them when the market's going up, or why are they buying them when the market's just down a little bit? That's a real subtle clue that they could be more concerned than what's showing up on the chart. So again, the VIX is a tough instrument to read. We don't want to put all of our emphasis on it, but it can help us with some of those little subtle clues that we look for. Chip stocks, again, they're down today, and that's another thing to keep an eye on. AMD, what are the main chip stocks? AMD reported their earnings. They initially went up, they gapped up, but you see this is kind of a bearish reversal candle. It opened all the way up here, closed down here. Intel already reported earnings. Big chip company, they're a Dow stock. Has a bearish inside day today, had a bullish day yesterday, bearish inside day today. This rally is looking a little bit choppy. Maybe this is going to lead to a drop. Not looking very strong there. NVIDIA, they report earnings, I think. I don't think it's next week. I think it's the week after. I think it's a couple weeks away. They had a bearish reversal candle. Actually, the last 2 days were bearish reversal candles. Opened higher, closed lower than the open. Opened higher here, but closed lower. Again, that's not strong price behavior. So it's opening strong and then selling during the day. And then today it's down, although this is more of an indecision candle today, not really reflecting strong bullish or bearish sentiment. But it's just a lot of things that just aren't giving me too much confidence. On that cheery note, let's take a look at some individual stocks that we cannot buy right now because we want to see a little bit more strength. All right, let's go to the sectors here, and let's start off with oil. It's right at the top here. There are a couple. I'm going to go into a subset of the. So here you can see it has all the different sectors, larger sectors right here. You have oil, utility, transportation, finance, construction, retail. For those of you that are new, you might not be aware of this, but what you can do is you can click on this little plus sign, and it'll break down subsectors within those larger sectors. So on oil, you've got, oil and energy is the main big sector there. You can look at the coal stocks. You could look at oil refining stocks, production and pipeline, refining and market. So you can break it down into different subgroups. Now, the strongest companies in these groups are going to show up in the main sector. So if I go into the hold section right here, if any of those stocks and any of those subgroups have a 98 strength rank, they're going to show up right here. 98 strength rank and a hold signal, they're going to show up in this main sector here. But the reason why sometimes I'll go into these subsectors because, sometimes when I'm looking at the main group like this, I have a tendency to like to recognize some of the companies I'm getting into. I don't have to know what the companies do or recognize the company, but if I feel like oil is going to go higher, I feel much more comfortable getting into Marathon Oil or Devon Oil as opposed to this PQEFF that I've never heard of. So sometimes if I don't see a lot of companies I'm recognizing in the group here, I'll go into that subgroup. And I did spend a little bit of time because obviously this is really the only group I'm interested in. So I spent a lot of time going through all these subgroups just to see if I could find ones that I like and ones that I recognize. And if you go into the field services, oil field services right here, and I went under the buy section here, and I like two of the very well-known companies, Halliburton, Schlumberger, 94 and 93 strength ranks. So they're down a little bit, but these are really strong companies. I like the charts on both of those. Here's Halliburton right here. You've got obviously you're breaking. Let's switch it to signals here so we can. Sorry, I have to keep clearing my throat. It seems like during the wintertime, I feel like I'm always congested, and I probably am. But then, you get in the summer, and then all the allergies, I'm always congested in the summer. So I'm just convinced that, so I'm probably going to be clearing my voice in every market update you listen to. But anyway, you've got you've got the sideways consolidation, and this has had a buy signal for a while, and but typically what I'm looking for is a 98 strength rank is the main focus. Can I get a 98 strength rank that has a hold signal, and then I wait for it to go from hold to buy as the confirmation to get in? That's typically what we do. You see me do it all the time, and I'll probably do it on some of these other ones I show you. But because oil is so strong, and I think it's going to go higher, and I think there's reasons for it to go higher, I've been looking at stocks that have. That's why I went into that buy signals section. I want to see, are there any stocks that have buy signals but are consolidating or giving me another entry point? Here's a little bit of consolidation. Remember what I always tell you: whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's the direction it's likely to move in after it's done moving sideways. Now, another thing I will point out, though, with years of experience with this type of a pattern, sometimes when you get these real flat moves, these real sideways moves, sometimes you can get a dip down, a sharp dip down that goes right back up again to kind of trigger that buying. An example of this I've showed you before, but if you're new, the dollar did this just recently, where we had this long real sideways trend channel. Previous direction was up, and you got a real quick drop, and then that triggered the move to break out, move higher. Okay. Sometimes it'll drop out of that real sideways range, and that's what kicks in the buying. The buyers aren't so strong right here. They're not very strong. Sellers aren't very strong. And that's why you're stuck in this range. And you just need something to spark the buying. What this is telling me is that these these buyers are waiting for a discount. They want a discount. They want to sell. And then the stock goes on sale on this quick drop, and then now they're aggressively buying. It goes up, and now they're chasing it because they don't want to miss out on it. And that's what can sometimes fuel that move higher. So just be aware of that. And that would be the case on that USO chart I showed you earlier that I might be getting into today. In fact, what I'm going to be doing on this one when I add it to the portfolio, on the other stocks, and I can show you these when I get to the portfolio, I use a tighter stop that's not too far away from, but I'm going to put my stop down below here. Not only because that was the breakout area there, you had an intraday low right here, but well, actually we're breaking out today, so it may not get that dip down, but I was a little bit worried that with this real sideways move, you might get a sharp dip down. I didn't want to get stopped out of that and have it take off. Looks like it's taken off. So, but anyway, that's kind of what you'd have to be, so if I was going to be trading Halliburton, and I'm not going to add Halliburton to the portfolio just because I've got already too many oil stocks, and the reason why I'm choosing USO is because that's just trading the whole oil group. It's not individual stocks, so if oil goes higher, I know that'll go higher. But you might consider it as kind of the same strategy as putting your stop down below here. Give it a little bit of room in case it does dip down a little bit on a little bit of a sell-off. Or you can even use this if you wanted a tighter stop. It shouldn't. This was a previous breakout. Here's new high. It broke out. Sometimes it'll pull back to that high before taking off. So maybe you can put your stop down here a little bit in this area right here. In fact, that's probably a better area because if it dips down further than that, you probably have a trend reversal in oil or a deeper pullback in oil. You probably don't want to be in it, or you probably get a really big, massive market sell-off, and you might not want to be in anything at that point. But that's probably a good area for a stop to be right there. But I like that pattern. It looks like it's just consolidating a little bit, maybe waiting for Russia to. Some days I like to take a break from listening to the news all day just because it gets nauseating, especially at CNBC when you see the same commercials repeated 50 times and it almost drives you insane. But I heard briefly a story that Russia is trying to manufacture a story that Ukraine was participating in some sort of genocide, and that would give them the reason to invade them or something like that. But the U.S., I guess our intelligence services broke the story, so that now they can't use that as an excuse. But this is getting, this is getting pretty serious. But I'm telling you, this is where it could spike oil, although I always get nervous when there seems to be an obvious trade, like oil has to go up, that the opposite's going to happen. But yeah, I think you'd at least get an initial spike that you could just make some money on. There's probably some really easy money to be made there. And then the other one in oil here was Schlumberger, SLB. But you can see kind of a similar pattern, moving a little bit sideways through here. And notice how it's kind of moving sideways right on that breakout area. I'd probably put my stop down here a little bit lower just because that's probably a little bit too tight, especially since Schlumberger is actually down a little bit today. But that's one that's a nice strong uptrend and looks like it's acting like it wants to continue. So those are two good ones. I told you, maybe start looking at some retail, because if the market is going to rally, we should start to see retail participate. Although I think we're really going to find out about retail with Amazon's earnings after the bell. Boy, if Amazon falls apart, look out. that could be the final trigger that freaks the market out, because that would be three of the FANG stocks that could, but I don't see it, because they're obviously the pandemic buying, Christmas holiday sale buying. Everything I heard about was pretty strong. I probably did more Amazon buying than I've ever done in my life over the holidays. So if I'm a reflection of how good Amazon should do, that's a good sign that I was doing some Amazon buying. I think we did take a look at STKS as one on Tuesday. I think we brought that one up. Again, this is critical. This would be critical that this low holds right here. And again, you'd still be waiting for it to go back to buy. I said you might even want to wait to see if it can break above this area right here as a little bit of additional confirmation. But there's a couple others there in retail that I liked. One was AutoZone, AZO, 94 strength rank. Had a little bit of a deeper pullback right here, but again, that's still a higher low. And it's getting ready to break out again. Now, sometimes what can happen when you're up strong like this is that it's usually pretty rare for it to go up like this and then continue that breaking out. A lot of times what will happen is you'll get a strong move up to the breakout area, and then it'll move a little bit sideways for a little bit of time before breaking out higher. Now, if it does that, again, you can be patient, because if it's moving sideways, the previous direction was up. Whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. But so my thought process when I see a pattern like this, though, is do I want to buy it and then sit on it as it moves sideways through here? Or I could get into another trade where, what if I'm in oil stocks and they're going higher right now? Why don't I use the money on those? And then if it moves sideways right here and I get done with the oil trade, now maybe it's ready to break out or it starts to break out, then I can jump into this one. Or if it does break out, well, the thing is, though, is that if it does break out, then a lot of times it'll barely break out and it'll come back and it'll move sideways along that breakout area. So, or it'll pull back to it at least to give you probably a better entry point. So I just don't like where it's at right here as far as an entry, but I do like the trend, the pattern. But this is one you could put in a watch list and just wait for the right entry point. And then another one was this HBP 97 strength rank. I think I've probably gone over this one before. It might even be in the watch list. Sometimes I forget what I have on my watch list, but again, nice strong uptrend right here. This looks like a pretty distinct possible ABC pattern right here. If that is the case, it should start working its way higher again. But the only time you know for sure you have an ABC pattern is after it breaks out. After it breaks out up here. That's why a lot of times you'll see me say possible ABC pattern, potential ABC pattern, because you can't know for sure it's an ABC pattern until it breaks out higher. And now you're like, okay, that was an ABC pattern. That was the pullback before it broke out higher. We say, well, if I have to wait for it to break out to know if it's an ABC pattern, then I can't. Then I missed the move. But that's why we look for the potential pattern and then we manage it. If that is a possible ABC pattern, then I'm expecting it to break out, go higher. How do I manage that? Well, maybe getting in with a little bit of confirmation. It looks like it's going up. Maybe put your stop below what you think is the end of wave C down here. If it doesn't go higher and and there's plenty of these, you've seen it if you've been with me for a while, potential ABC pattern, and then it rolls over and drops, it stops you out. Okay, that's why trade management and money management is just as important as finding stocks to trade, is because you find the patterns, but then you got to manage the trades because they're not always going to work out. They're not always going to get what you're expecting it to do. But when you understand that stocks typically pull back in a three-phase move, the initial pullback, the bounce, the final pullback, and then a continuation. Initial pullback, the bounce, next pullback, continuation. Initial pullback, the bounce. It's reasonable to assume that that's a possible ABC pattern that the stock should continue to move higher. All right. Another area I found a couple of trades too was if you go under your muscle stocks, you can go under your new buy tab right here. These are stocks that have just gone to a buy signal. And then you start looking at, these are all 90 strength ranked stocks. You can look at the 98. I didn't like those patterns as well. It's not like I didn't like the pattern on BTU. It's just a coal stock. I have just a tough time putting money into coal just because there's such a, although we're going to be using coal for still a long time because so much of our grid, our power grid is based on coal, but it's just hard. I just don't see the long term because there's so much of the push is to change it to alternative energies. It's just I always have a tough time with coal. I'm not there yet on like natural gas and oil because I know that's a long ways away from being completely replaced. But it's tough for me to, and I got burned several years ago on coal companies just really dropping after having a surge, and so I have no really. But again, that's me. But you could definitely jump on that one if you like coal and think it's going to go higher. But I came down the list a little bit and I looked at this ECPG Encore Capital Group 96 strength rank. Nice uptrend right there. And again, this is a kind of a moving sideways consolidation through here. It's already at a buy signal, but you might wait for that little bit of extra confirmation, see if it can break out, particularly since we just talked about how the market conditions are looking a little bit more bearish. And then another one I saw in that group, was this IPI 94 strength rank fertilizer company, but I liked there's this larger move up, and then this looks like a larger kind of ABC correction, and then a really sharp impulsive move up off of that. Already has a buy signal, with the momentum it has, and this is with the momentum it has, and the fact that it's up in a down market too, it could be, there's a pretty good probability it could get up to this breakout area up here. Yeah, and I'd probably put the stop below, because this looks like the end of the correction right here. Here's your surge. If it reverses that surge and comes back down below this low, you'd want to be stopped out. It's probably not going to be working out for you at that point. All right. Now let's look at the portfolio. Marathon looks good. Looks okay. It's kind of a little bit of a pause today. It's showing it's down a little bit, but it's higher than where it opened. So it's showing we're down almost 2%. But here's where we closed yesterday. We opened a little bit lower. We're trading higher than where we opened. That's not bad price action on a down day. It's resisting a little bit going higher, but I think it's a lot of that's with the selling pressure on the overall market right now. But that one still looks good. Devon, same thing. Just kind of consolidating through here, and I think I had my stop. My stops are real tight. I think on these, they're like right below here. Continental CLR right at the breakout area. Up a little bit today. But again, all these, I think, and you know, if you're trading oil in anticipation of that you could get a big move based on what Russia might do with Ukraine, you can't wait for because once it happens, the oil's going to surge, and that might be the only move you get is an initial surge, so you'd probably miss it. You got to kind of be getting your position ready now. If that's what you're trying to trade, or that's what you're anticipating. And that's why I wanted to add another one here today, especially after hearing that news story. So let's go ahead and put in USO. And add to portfolio right here. If you might have noticed that I had these other portfolios that I used for examples and classes I was teaching, and I never looked at them, I never used them, so I just deleted them, and that way we didn't have all these different portfolios. I was just afraid I would accidentally put a stock into the wrong portfolio, and so I'm like, there's no need to have these right now. So, all right, so I'm going to put my stop. I want to get my stop, I told you, down a little bit. Down below that was kind of the breakout area there. So I'm going to put it at about $58.50. See, 100 shares would be about 6,000 in the trade. Only a 0.5% portfolio at risk. 120 be 130. I want to be right around 8,000 in the trade. So typically I like to be about 10,000 as far as allocation, but I've been getting a smaller amount because I want to keep as much cash as I can in case we have a bigger drop. So that looks good. I think I'm going to stick with that. And let's go ahead and purchase. So I still have over half my cash, 53,000 still. Now, again, is this dangerous? We're all oil stocks. Yeah, but very low probability that we're going to see a crash in oil, especially with all the catalysts that you can see out there. And, you know, the alternative would be I'd be sitting on cash. I really wouldn't want to be getting into anything. And so I just think there's some easy money there if that Russia-Ukraine thing happens. And so I'm kind of geared up for it. You know, I think I'm going to spend a couple minutes here and address that, though, because I know if you're listening to Jim Cramer on CNBC, and most portfolio managers, they're always obsessed with diversification. And I understand the whole diversification argument. But as trend traders, if you're purely a trend trader, which is really what our focus on with the software and everything is, all we care about is what is trending, what is moving. I just don't see the point if you've got a sector that's just obviously everyone's buying, those professional traders are buying into that sector, and you don't have a good size exposure in that sector, and you go into one of these weaker stocks just because you feel like you've got to have technology represented in your portfolio, that stock is going down because technology is not great right now. It doesn't fit with the trend trading mindset. Trend trading is you're trying to be unemotional, and you're trying to say, I just want to see where the money is going and follow it. I don't care if it's all in one area, because if it is mostly in one area, that means that those professionals are in one area or mostly in one area, and I want to follow them. Now, I still think you can blend the two, because typically, and this is kind of a unique situation where really oil's the main bullish sector right now. The others are kind of iffy, but typically you'll have like, 2 or 3 or 4 strong sectors that their money is flowing into, and you can be diversified a little bit that way. And that's what ends up happening a lot of times in these updates, is we do have a lot of technology, a lot of maybe retail or something, but we're diversified in a way that we're not, everything's not in one sector, but they are in the stronger sectors. So I'm not saying that this is a unique situation. I'm not saying that you should always just pile into one sector, because there is risk if all that money starts coming out at once, which it usually does. It'll come out quickly. Stocks will typically fall a lot faster than they rise. You made a lot of money with that run, but you can give it back very quickly if things start dropping very fast. So, but that gets me into profit taking along the way. Recognizing bearish reversal signals that could signal when it might start pulling back, or when these professionals are starting to get out. But I'll get emails, especially I have gotten emails recently of, Terry, you're all in oil stocks. Where's your diversification? Shouldn't we be diversified? And like I said, I don't like the idea of being diversified for diversified sake. It doesn't make a lot of sense to me that I've got to go buy some, I got to go buy tech stocks that are trending down or looking very weak. Their patterns are very weak, just because I need to be diversified. It doesn't make a lot of sense to me. So anyway, more than anything, I don't care if you follow that perspective or not, or agree or disagree with me or not. I just wanted to let you know that that's kind of my philosophy. So if you see me doing something like this and you disagree with that, you say, I just don't think that's a great idea. Well, you could also modify it. Maybe you have just one oil stock right now and the rest in cash, or 2 and the rest in cash, to where you're not exposed if it does start to drop, because you have all of it in one sector. So anyway, that's all I have. Have a great weekend, and we'll see you back here next Tuesday for the next market update. And hopefully the market can hold up a little bit. Now, remember what I said, though. If we're down pretty big in the close day, which is looking more like we are going to do, let me double check that here. The chart here. Yeah, we're moving. Oh, what happened here? We're dropping pretty strong in the close. How's that Nasdaq? Let's look at Nasdaq 100 here. Yeah, that's looking pretty ugly. It's looking like, now again, Amazon could reverse this if they're the big company reporting after the bell today. But if we are down tomorrow, remember that markets typically don't bottom on a Friday. We probably have further downside on Monday. Just remember that, and that'll help you until we get to Tuesday's market update, and then we can analyze what's going on, where we're at that point, and see if we need to start throwing out the life vest for you to stay afloat. All right. Have a good weekend. Bye, everyone.